Polygon is making surprising gains because of one major factor, and we now see why Aptos is up over 400%. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. After sealing its highest weekly close in almost 6 months, Bitcoin remains up over 40% year to date, with the monthly close just 48 hours away. The United States Federal Reserve will decide on its next rate hike this week, with Federal Chair Jerome Powell giving a much anticipated commentary on the economy and policy on February 1st. There is currently a 98.4% consensus that the Fed will hike rates by 25 basis points. This will be a further reduction compared to other recent moves and the smallest upward adjustment since March 2022. If speculators are right in assuming that the Fed will now trend towards halting rate hikes altogether, this would offer long-term breathing space to risk assets across the board, including crypto. And if that's the case, it wouldn't be surprising if markets plumped all week ahead of the FOMC announcements. However, according to the Crypto Fear and Greed Index, the mood among Bitcoin and altcoin investors is now predominantly one of greed. So while the almost guaranteed 25 basis point rate hike this week looks like the markets will rally, we're also getting high up in the Fear and Greed Index for what is a much different macro environment. I think there's going to be a lot of volatility in the coming weeks, up or down, but what do you guys think? Are we rallying to 28K or will we dump below 19K again? The third version of the crypto lending app AAVE has now been deployed on Ethereum for the first time. AAVE v3 was originally released in March 2022 and deployed on multiple Ethereum virtual machine compatible blockchains shortly afterward. Until now, Ethereum users only had access to the app's older v2. AAVE v3 includes several features intended to help users save on fees and maximize efficiency of users' capital. For example, high efficiency mode allows the borrower to avoid some of the app's more stringent risk parameters if the borrower's collateral is highly correlated with the asset being borrowed. Developers say this may be useful for borrowers of stablecoins or liquid staking derivatives. In addition, the isolation feature allows certain riskier assets to be used as collateral as long as they have their own debt ceiling and are only used to borrow stablecoins. Under the previous version, this meant that lower market cap and illiquid coins often couldn't be used as collateral. V3 also includes a gas optimization algorithm that developers say will reduce gas fees by 20 to 25%. And on January 26, Mark Zeller, integrations lead at AAVE, stated that the firm purchased 2.7 million Curve tokens, which would clear excessive remaining bad debt within the next 15 hours over a dozen transactions. The bad debt on the AAVE protocol resulted from a sophisticated exploit that took place on November 23rd. Abraham Eisenberg, who previously drained DeFi protocol Mango markets and caused $47 million in net damages, took on a series of heavy volume short curve positions on AAVE in an attempt to orchestrate a short squeeze and force developers to buy back his positions at upwards of 100% slippage due to the lack of liquidity. However, it turned out AAVE had much more liquidity than anticipated, and Eisenberg reportedly lost $10 million on the trade. Nevertheless, some slippage occurred as a result of the incident, and AAVE was left with a total of 2.6 million Curve and bad debt while liquidating Eisenberg's position. The United States SEC has charged Eisenberg with stealing $117 million in digital assets, and Eisenberg was arrested in Puerto Rico by the FBI on December 27th on charges of commodities manipulation and commodities fraud. Amazon is launching a digital assets enterprise, according to 4 sources familiar with the matter, who said that an NFT initiative is expected in the spring. Amazon has been shopping around the digital collectibles effort to no shortage of power players in the industry. Said to be among those entities are Layer 1 blockchains, blockchain-based gaming startups, and developers and digital asset exchanges. Sources said there's a focus on blockchain-based gaming and related NFT applications. One example in the works is getting Amazon customers to play crypto games and claim free NFTs in the process. And April appears to have been when the e-commerce giant is said to make its bold crypto ambitions public. We knew it was possible, the sources said, but now it seems like it's really happening, and that's going to affect the existing players in the space. The upcoming DJED stablecoin and its Shen governance token will list on Cardano-based decentralized exchange MuesliSwap and MinSwap after their issuance set for this week. The highly anticipated DJED stablecoin has been jointly developed by Cardano IOG and Coty, a Layer 1 blockchain. DJED will be backed by other tokens and requires more than 400% in collateral value to be posted before it's issued to a user. A MuesliSwap developer said, "We're going to launch a concentrated liquidity pool similar to Uniswap version 3 next week with the DJED launch, so we expect that the trading APR itself will be already above 10% as capital can be used more efficiently. We are aiming for at least 10 to 15% farming APR for both the pairs DJED and Shen, so in total, we're aiming to be above 20 to 25% APR in the first month to attract liquidity. JED is expected to go live on over 40 Cardano-based decentralized finance applications on launch. Developers have simultaneously developed JED Pay, a payments application that uses JED that would allow users to transfer the tokens to merchants and businesses. Cardano founder Charles Hoskinson tweets, "It's exciting to see things moving so quickly in the Cardano ecosystem. Sidechains are coming along, including Cosmos. JED is launching soon, Hydra and Mythal on schedule, Lace almost out of beta, and tons of dApps coming online." Alexander Dreyfus, the CEO of Web3 sports blockchain at Chiliz, recently tweeted, "The launch of Chiliz Chain 2.0, a curated blockchain for the sports and entertainment industry, is coming. Staking, DEX, whitelisting, new NFT standard, memorabilia certification, fan tokens, and much more, with the help of 150 sports teams and a 2 million user base." But what do these changes mean, and how will they affect investors and Chiliz value? Well, the availability of a DEX and staking might be the biggest news. If this major Chiliz network upgrade is successful, then Chiliz might benefit from more long-term demand. This move may strengthen its long-term outlook, and the network itself will benefit from more utility. Chiliz says, "Over the past months, we've been working hard to ensure that this is the best version of our product before we present it to our community. Spicy Testnet is the last major upgrade before the launch of Chiliz Chain 2.0 mainnet." Polygon's MATIC is currently trading at $1.11 and is up 48% since December 31st, amid a spike in daily transactions that have made the blockchain the second largest for daily active users, surpassing Ethereum. Polygon platform ranks second behind Binance's BNB chain, recording 344,000 daily active users, ahead of Solana and Ethereum. Polygon's announced partnerships and launches over the past month that have increased daily active users and may also be behind the price increase, along with the anticipation of the Polygon's mainnet launch of its zero-knowledge EVM. The mainnet launch is scheduled for earlier this year, and its ZkEVM public testnet went live in October. Total value locked on Polygon has also risen from $994 million to $1.2 billion in the last 30 days. Blockchain platform Fantom plans to introduce version 2 of its FUSD stablecoin to provide a more predictable and budget-friendly system for builders, partners, and users. The new version will allow stakeholders to allocate fees in either Fantom or FUSD and to predict the future costs based on usage. It will allow programmers to build additional institutional products for users and provide a more consistent system for planning and budgeting for grants. Fantom users can use their Fantom to mint FUSD and access DeFi applications built on the system, such as those for lending. The migration to the new FUSD will result in the liquidation of any positions where FUSD debt is equal to or greater than the Fantom backing it. To help users close out their positions, Fantom has built a swap tool that allows users to swap the DAI stablecoin to FUSD and settle their outstanding debt. Layer 1 Aptos has seen the price of its token soar by 460% since the start of the new year. Previously dubbed the Solana killer, proof-of-stake network Aptos promised to create a fast and cheap blockchain for NFTs, DAOs, and DeFi activity, but fell short when it launched in October of last year. And only 50 developers are currently active on Aptos, according to data from Token Terminal. Its number of daily active users currently sits around 31,000, and despite these numbers, Aptos' fully diluted valuation is significantly greater than that of other blockchains, including Avalanche, Solana, Polygon, and Optimism. The price rally of Aptos parallels the beginning of the Zango Blockchain Foundation Week in South Korea, where the project has been heavily promoted. In fact, Aptos' focus on the South Korean market has always been intentional. The Twitter user who goes by DataRocks noted in a series of tweets that the company had released a Korean language version of its white paper and partnered with local gaming company nPixel in November last year to launch Metapixel. Significant buying interest for Aptos is coming from the South Korean won trading pair on the Upbit crypto exchange. The exchange constitutes nearly 40% of Aptos' trading volume, and the price of Aptos on Upbit is trading around 1 to 3% higher than the market price, which indicates high demand in the region. There's also a chance that the volumes of Upbit are inflated from wash trading, or it could be an attempt to manipulate the markets. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.